Welcome back. You're watching Investors Guide in 80 now. Thank you for staying with us. Dhirendra Kumar is with us as well. It's time for our product review of the week. And this week, we're looking at the Franklin India Equity Income Fund. Avan is here to introduce us to that fund, and then Dhirendra will tell us whether or not we should be investing in it. Avan.
Templeton India Equity Income has the mandate to invest up to 50% of its total corpus in foreign equity, which makes it an interesting fund for those of us who want to diversify outside the Indian market. But has it delivered? The fund currently invests about 35% of its portfolio overseas, mainly in Asian stocks. The fund manager employs a value-based investment approach, which can sometimes be contrarian. The fund doesn't have any constraint on the investing based on capitalization, which gives its manager a lot of flexibility to pick his stocks. The fund maintains a compact portfolio of around 31 stocks, out of which 22 are listed in India. From being an average performer for 2 years, from 2009 onwards, the fund's performance began to significantly improve. Its long-term returns put it in a good light. It has also beaten its category by a comfortable margin in 2009 and 2010. It managed to contain its losses in 2011. But let's put some numbers together to give you a better perspective. If you invested 1,000 rupees in this fund when it started, you would have 2,040 rupees today. So should you invest in this fund? Our experts are here to give you the answer.
Alright, Avan, thanks for that information. Teresa, this is an interesting fund. It has a track record, obviously, for dividend declaration and distributing dividend on a regular basis. If we look at its returns, it's beaten its category on 5 years and 3 years, even over the last 1 year. Is this the kind of fund we should be investing in a market like this?
This is the kind of fund which one should be investing a part of one's money, maybe a third of one's money, in a fund like this. I would say that the other nomenclature which we find is of a similar which has similar character is the dividend yield fund or the contra fund, because these are relatively proven a portfolio of proven companies and companies which have some history. They provide great stability, and this is the kind of portfolio which does much better when we see a turbulent market or a falling market, so to say. Besides that, this fund can invest up to 35% into foreign stocks internationally, and that too in stocks with similar character. So that, I think, adds far greater diversification.
Let's review the fund management process here. It keeps a fairly tight portfolio of about 30 or 31 stocks in its portfolio. Do you think that sort of a strategy works well, or has it worked well for the fund so far?
Depends. It is also a matter of scale. But this is the kind of portfolio where the portfolio can be much tighter, because it's not a mid-cap fund. Even if it gets larger, it has no, capitalization constraint that it has to invest in companies with capitalization of this much or that much. Besides that, its focus is pretty straightforward. Stocks which are relatively stable, which are income-producing stock, and which the corollary of that is that the downside is protected.
Finally, your rating of this fund, where would you place it?
I would rate it as an excellent fund, and I would give it a 5-star.
Alright, so this is rare on Investors Guide. 5 stars for the Templeton India Equity Income Fund. Remember, 5 stars. Dhirendra also said that this is a fund we should all have in our portfolios, because it also gives us the kicker of stocks from overseas, which is an interesting way to diversify from the investment purely in the Indian market. Let's move on now to our hold or sell segment. Kannan Nair has written in. He's 47 years old, Dhirendra. He began investing for his retirement through SIPs. He wants to know if his investments are on track. Now, given the fact that he's 47 years old, he might have a maximum of about 12 years before retirement. So he should possibly consider that when he's making his investments. He has about 2,000 rupees a month going into these investments right now. The first on his list is the DSP BlackRock Small and Mid Cap Fund. He began investing in this fund in October 2010. Would you recommend he continue that investment?
Yes, he should continue investing in this fund. And it's very important that when you choose such a fund, a small and mid cap or a micro cap or a small cap fund, you must think in terms of going through a full cycle. because you started investing in lean times, it will have significant downside, and the upside will come in a very brief period of time, and it will come when you least expect it.
Franklin India Blue Chip Fund, 4,000 rupees every month from September 2007. So it's a long-running SIP. Impressive fund, Dhirendra. Should he continue?
Yeah, absolutely. If one compares blue chip with any index fund, which is a very reasonable comparison, it beats benchmark by a modest margin over most time period, over any, if we take any discrete time period, it does well. So yes, have it. It's a hallmark of active management in India, 20 years.
That's an impressive review for a mutual fund. HDFC Top 200, 4,000 rupees every month from November 2008. This is also an impressive fund that gets mentioned a lot. It's had a rough year over the last, it's had a rough 1 year. Would you recommend he continues this investment?
Yeah, absolutely. He should continue his investment. And there has been period in the past as well when this fund has had bad times for a brief period. And I think it will be too early to write it off. Keep investing.
The Sundaram Select Focus is the next on his list. He's been investing in this fund from November 2008 as well. This is also a good performer, Dhirendra. Continue this investment?
I would say that this is a fund where you should consider exit. Because it's, brief period of time it does well, but, if I look at it more holistically, this has been a disappointing fund. I think its best years are many years behind it.
Alright, so we're getting out of that fund, which leaves him with 3 funds in his portfolio, the small and mid cap, blue chip and top 200. Would you recommend he adds something else in order to diversify his list?
No, I think these 3 funds give them a reasonably diversified portfolio, and also across capitalization. So I don't think there is need to add anything on top of this. He can spread the money which he will be saving, which will discontinue from one fund into these funds as well.
Alright, Mr. Iyer, that's the advice you're getting right now. Remember, you can always reach us if you have any more questions about your investments. Dhirendra, thank you so much for joining us on the show and answering all of our questions. We look forward to having you back again next week. Coming up after the break, we'll tell you if you're investing in endowment plans, is it the ideal way to create a corpus? That's after the break. Don't go anywhere.